Oha. Ach, hat das korrekt? Ja, wusste ich ja nicht. Ich dachte, ihr habt das geteilt.
Welcome to my talk. I would like to indeed thank the previous speakers. That was interesting. It also touches a bit on what I will talk about. Let me share my screen. Here we go. Because today I will talk about DeFi's magic money. And my name is indeed Lelie. I am the head of research at the oldest crypto fund of Europe, and it is called Cyber Capital. If you want to learn more about Cyber Capital, you can look at the QR code right here. You can scan it and find more. And even though I am the head of research and I work at a crypto fund, what I'm going to talk about today is actually not financial advice. And I know, this is something that you've all heard of many times before, but I really mean it today. I want to talk more about life advice, because just as Robert already touched upon, is that I believe we should all do our own research with this crypto thing. DeFi right now is creating immensely interesting new technology. It's super innovative. A lot of people, they come to crypto for the gains, but they stay for all of these interesting talks that people, the value that's being created. And I will talk about a bunch of different protocols today, but it's not really about the protocols itself. It's more about getting a feel of the innovation that's happening. Also with me, I am just one of many sources. So I would like you all to also indeed put in the 2 hours, like go to YouTube, learn about it, or read the docs, or indeed use it yourself. Now, I myself have a pet project. It is called the Do Your Own Research Wiki. It is an open wiki, so all of you can just add. There's only one requirement, and that is to add sources when you add something there. So it's a project of mine where I try to give more also back to the community, that everyone can learn more. And here is, again, a QR code that you can scan with your mobile phone. I mean, I do know that this is being recorded, so maybe you can, if I go too fast, later on, check it again and pause it and then scan it easily. And the projects that I will also talk about today, every time there will be a QR code that you can scan. So let's dive in. The first thing will be a couple simple basics. So at Cyber Capital, we have divided the blockchain projects into 3 layers. The protocol layer, which most of you know is like Ethereum or Terra or Avalanche. And then we have the network layer. This can be built with, for instance, smart contracts. Here you see, for instance, MakerDAO, which I will talk about a little bit more. And with these networks, we build a whole lot of new application layers where the financial innovation is really happening now. This is also called money Legos because it is all very composable. We can use these different layers and build really new programmable money. So I'm going to explain a little bit now about over-collateralized lending. Most of you will already know this, but it's one of the building blocks that we will use a bit further. So you have Ether, which is the coin of Ethereum, and you can put that in a smart contract on MakerDAO, which lets you borrow against a collateral ratio, a stable coin called DAI. And this over-collateralized lending has become really big and basically started DeFi. MakerDAO is really one of the starters. Now, another project that maybe some of you already know is called Aave. And in Aave, it's a money market. You can lend and you can borrow. There you can deposit all kinds of tokens. As you can see here, we have Ethereum, MakerDAO, DAI. And then as a sort of receipt, you get a token back. And this A token is not just any token, it's a yield-bearing token, which gives you right to the fees of the borrowers who are borrowing your token. Now, there are not only A tokens, there are also Y tokens from Yearn, also a very famous one. And here you see Yearn tokens being used in yet another protocol, Curve. And as you can see, all these tokens together, A tokens, Y tokens, it creates sometimes quite long names of token options. And this might be already a bit confusing to some people. Now, there was a project that understood this, and they have decided to help people who do want to have exposure to the DeFi market, but who don't want to do the own research, just want some exposure. And here we have SET, who have the DPI, the DeFi's Pulse Index, and they give you exposure to a whole range of DeFi projects. Now, we are talking about DeFi magic money today. So this is nice, an index, but an index is a little bit too old school. And this is all open source. So the DPI, the DeFi's Pulse Index, has been cloned, has been forked, as they say, by BasketDAO, who has created the exact same index, but with yield-bearing tokens. As you can see here, AAV, ASNX, or C-Uni from Compound. So now you don't only have an index of tokens, but you have an index that is also actively creating yield for you. But this sounds great. But of course, what I want to let you remember of this talk is that we should do our own research. So with the index protocol, index co-op, here you can scan if you want to learn more on the wiki page. There we have, for instance, because I don't want to be the only source here, we have DeFi Safety. And DeFi Safety is one of my favorite organizations. They do reviews on projects. They look into if code has been tested in admin key situations. And let's see what they had to say about the index co-op. Well, they say that it scored a 49%. That is not very high. There have been no audits performed, and there are few docs, weak testing, and more effort needed, guys. Well, personally, I am a community member of the Index Co-op, so I definitely shared this with them on Discord, and I hope indeed that next time that DeFi Safety tests Index Co-op, we will score a bit higher. Now, with the Basket DAO, let's look what happens there. There, the founders are not public, so they are anonymous, so you're basically trusting their code, but the contracts are not audited. And it's called Basket DAO, but it actually has no decentralized autonomous organization yet. They say they will do all of these things, but for now, you're basically trusting these anonymous people with your money. So this is also one thing that I really want to deliver here today, is that there's so much information out there, and there are very interesting projects, but mainly with do your own research is that you have to decide what risk management you will follow, because these projects will have very nice pages, it all looks amazing, the magic is there, but it's up to you if you are okay with unaudited contracts or with anonymous founders. That's something only you can decide. Now, another project that I want to talk about today is Anchor. You might have heard of it. It has been quite popular lately. So real quick, we had the DeFi Pulse Index with all these different tokens, and then the Basket DAO with the tokens, but with the yield-bearing version of it. So then we had the Basket DAO, and now we're back up at Anchor. So Anchor is promising a steady 18 to 20% APR on stable coins. Now, that's obviously way higher than traditional finance is giving you on your fiat. So this is quite a promise to make. So what they say is you buy their UST stablecoin and you can deposit it for 20% interest. Quite a thing. So where does this 20% interest come from? Well, it comes from a couple of different fees. One of them is the borrow fee. So people who borrow have to pay for borrowing. I saw it just before, it's around 30% now. And they also have yield-bearing collateral, which we will talk about a little bit further, and general protocol fees. And they have a treasury, which also gives some of the percentage when the rest is not doing well enough. But how does this all work? Because Anchor has created quite an elaborate ecosystem and a lot of different options. So as you can see, this is quite difficult and it might be overwhelming the first time. So I'm going to take us step by step and see what this magic uses for tricks. So you could just buy UST and lend it out. That would be the easy way. Just buy UST, get 20% interest, or between 18 and 20. But you could also borrow. Yes, and you might be like, why would I borrow? I have 20% right there. Why would you do that? Well, borrowing in this case actually gives you more. So let's go through this. We have, with the Terra blockchain, which Anchor is built upon, you have, just like with Ethereum, you have ETH. Here you have Luna, that is the token. So you could buy Luna, and then you can bond it. Now, bonding it is basically that you stake the Luna. Now, for the people who don't know what staking is, a very quick primer. People who have tokens of a proof of stake blockchain, they can lock these tokens up in a staking wallet. Then a algorithm selects one of these wallets randomly, and this wallet then validates new transactions for the following block. Then all the other validators, they check if this is all correct, and then they add the block to the blockchain. And this means they are creating security and they are adding new transactions. And because of this, they are earning a reward, the proof of stake reward. So with Anchor, you can bond this staked Luna, and then you provide it as collateral. Just like with MakerDAO, you can provide collateral on Anchor, but you are giving up your staking rewards. So you might be like, why would I do that? Why would I borrow at 13% and give up my staking rewards? Well, here it comes. It's because you are getting paid to borrow on Anchor at the moment. So even you're borrowing, you're still getting paid. And also quite a lot. Now, this is from the start. Anchor is now 1 or 2 months old. It started with 300% yield. That's a lot in Anchor tokens. Right now, it is around 200%. So you borrow for 13%, but you get 200% in Anchor paid. Now, you could say, OK, so they are just giving me these Anchor tokens. Why would I want these Anchor tokens? Are they worth anything? So let's look at it. These Anchor tokens, why do they have value? Well, they have value because they're used in the governance of this project. A lot of DeFi protocols right now, they use governance tokens. And what they do is you can stake them and earn a little bit of more Anchor, or you can vote. That's also, of course, important. And why is that important? Well, because this governance will, in the future, also decide what kind of new collateral can be adjusted. And basically, the people who are now the early adopters and earning a lot of these Anchor will be able to shape the project. But if we do our own research, we see there's a 4-year inflation schedule. And after that, no more ANC tokens. So they are really pumping it out right now. But how are they going to incentivize borrowers in the future? That is still unclear. Now, you have finally borrowed your UST. You're making a lot of ANC tokens. What can you do with it? Well, you could deposit it again and get another 20% interest. So now you are staking, borrowing, earning ANC, and you are, again, also lending it out against interest. It's getting quite magical already. So what else could you do with UST? You could buy more Luna and just, again, mint B Luna and do it all over again, circular. Now, the thing here, though, is this is quite risky, because when you are providing collateral, it means that if the price of the collateral goes down, you could get liquidated, which we definitely saw last week with the huge crash. So these circular motions are definitely risky. You could also stake the Luna and earn fees, and also quite some airdrops are happening within the ecosystem of Terra. What you could also do is go into the Mirror protocol, but that is for another day. All right, so this is Anchor. Let's see, the yield comes from the borrow fee, from yield-bearing collateral, the staking, from general protocol fees, and the yield reserve. But let's look at the other side of this, because this sounds too good to be true. So what is the risk that you are taking? Well, there is only 4 years of incentivized inflation, so we don't know if this will go on forever. The governance of this protocol is still unclear. Even though the governance tokens are being handed out, it is still quite unclear how this governance will work. Furthermore, the bonding of Luna, which is a critical part of the system, is done through a project called Lido. And Lido at the moment is permissioned, it is centralized. And then there are systemic risks, like the UST, the stablecoin, could lose its peg, and the price crash of Luna could lower borrow demand and lower APIs and staking rewards. Now, well, last week there was a huge crash, and if we look at it, the Terra blockchain handled it quite well, but indeed, I believe the ANC inflation was at 90% for borrowers, and now it's back up to 20% to keep this 20% yield going. And it has been hanging around 18%, the lower end of what they are promising. So we've talked about over-collateralized lending now, and we already talked about Maker. Now, one other project that does this is YEarn. They have a ETH vault. You put in ETH, it goes through Maker, you have stable coins, and YEarn automatically for you uses the stable coin, puts it in Curve in a pool where you get LP tokens, liquidity provider tokens, which you can stake, they can get tokens back, and they get sold back for Ethereum. So another quite unimaginable thing for a couple of years ago, but now it's all happening. And you just have ETH, you lock it up, and you get more ETH. Quite cool. But now, hey, what is happening? You're borrowing. So this is something that is still an issue that you have to think about. You have a debt. But a project has come along that wants to help you even with this, and it's called Alchemix. What does Alchemix do? Well, you can make a deposit in Alchemix to the protocol, and they put this deposit in the YEarn vault. So then it's earning. Up to 50% of your collateral's value you can request as a loan. And your deposit in the meantime is earning this interest with YEarn. So what do we have now? Over time, that yield auto magically pays off your debt. And now we got loans that pay back themselves. I mean, it's getting very, very interesting with DeFi. All right, but we have to do some research. And what is up with Alchemix? Again, an anonymous team. The audit mentions 8 points of centralization risk. That is really high. If you look into the audit, it's basically saying that right now, this is not DeFi, it's CeFi. Plus, it has high gas fees, so not worth it for small users. And if you invest in the token, it has continuous inflation. So these are things that you should look into because they might not say it on their one-pager. So recap time of my talk. Well, DeFi composability and tokenization, they are creating magic money, as we have seen today. And the magic is usually just over-collateralization and supply inflation. But, of course, most importantly, do your own research. That is really the important part here, because this magic looks cool, but it's probably some tricks, and it's up to you if you want to take these risks. Now, so if you liked this talk, and if you want to do more research, go to the wiki over here. We have over 3,000 pages on projects in the crypto space, so probably whatever project you look for, it's in there. And if you are a researcher and you feel you're up for it, you could go to our website because Cyber Capital is hiring. So maybe I will talk to you soon, which would also be cool. Thank you all for listening, and it is time for the Q&A. So yeah, bring it on. Any questions?
Thanks so much, Zev. Does anybody have like any questions? I haven't seen anything on the Q&A yet.
I can imagine that DeFi magic is overwhelming.
Yeah, it is. So I can ask like, one question here.
Yeah,
so like, you have already seen like the complexity of and like lending it, and then you can also borrow, you can stake it like in all this process. So like for new users who are new to DeFi, maybe like they have been in the crypto, what is your like, best suggestion, like how they can get started in the space?
That is a very good question. because indeed it looks like there's so much happening and innovation is really fast. So I would say there are two tips that immediately come to mind. Number one is, as we already discussed in the previous panel, is do things. But hey, when you use it, you're paying. So that might be a bit much for certain people. Now, luckily, there are some projects out there like DeFi Saver, where you can try out DeFi without paying on testnet. And there's another one, what was the name again? DeFi wallets. Well, there are two main ones right now where you can try without spending any money. So I would say do that first, because that's great. You can get a feel of it. You can use, Instadep, exactly. Yeah, that Instadep is, I believe, Instadep and DeFi Saver, I suppose then. Yeah, so that is awesome. You can simulate, you can use Maker, Aave, Compound. So that would be the first one. And the other one, like if you really think that the idea of uncensorable global money is cool, then you could go for an index, and then you still have exposure, but you don't have to look at all the new innovations every day, because then these DAOs will look for you, because Index Co-op, they do have weak docs and testing, etc., but they are a real DAO, and they are already adding new promising projects all the time. So I do think it is a worthy project to look at, but mainly try Simulate first.
Okay, all righty. Thank you, Zeb. We really appreciate it. Thank you so much for your time.
Sure. Yeah, it was a pleasure. Have a good day, morning, and evening, everyone. It is global.
외국